Hi, I'm Pattu from FreeFinCal. So let's take a look at my plumb line for the last quarter of 2020. This is a handpicked list of mutual funds that I have been publishing since September 2017. Before we begin, I just want to point out that I had also written about getting a pension or getting a income from Government of India bonds, not RBI bonds, but Government of India bonds instead of the standard insurance pension or LIC pension. I'll make a video on that tomorrow, and or you can go to FreeFinCal to check that out. And also today I had talked about the new NFO from Nippon India Nifty Small Cap 250 Index Fund, and whether it makes any sense to consider this. So this also I'll make a video in the coming days. And before we get to the plumb line, I just want to point out that as you may know, as I have been telling you again and again, my new course, How to Get People to Pay for Your Skills or Earn from Skills, is now open. There is a 60% early bird discount currently on. You can buy the course for 2,000 instead of the full price of 5,000. The early bird discount will expire on October 5th, 9 a.m. That's 9 o'clock in the morning. So please buy that before well before the deadline. Otherwise, in the last minute, there could be problems with the transaction and so on. So do get to that as soon as possible. All right. So coming to the list of funds, I've got too many windows open. My Mac is struggling to even get to the next tab. There it is. So I'm just going to go straight to the funds. There's a long disclaimer that you have to read about, and by watching this video, I assume you would have read the disclaimer because I can't be going through the disclaimer here. If you are a new mutual fund investor, I would recommend my free ebook Mutual Fund FAQ 100 Essential Question and Answers for New Investors. That's available on the plumb line link or in the free ebooks menu or link in the menu. So we'll start with overnight funds. These are funds which I would not recommend for retail investors. They're just for corporates and companies and so on. I have talked about this in great detail several times before. I have recommended L&T fund, Axis fund, and UTI fund, but that's just too conservative. If you're a retail investor, you are better off with liquid funds. You can stick to safe funds like Quantum Liquid or Parak Parik Liquid Fund. They all have fairly decent portfolios. Many other funds also have decent portfolios. It's not as if they are the only ones. The big fund houses, SBI, HDFC, ICICI liquid funds can also be considered safely. It's not you can't be so scared about credit risk and worry too much. So that's for liquid funds. You can use liquid funds for a few weeks, few months, and so on. You don't invest in these for returns. It's just some place to put your money in. That's all. Of course, you can argue I can put my money in a SB account or FD. That's fine too. Then there is the equity arbitrage fund. This is for more than 1 year. Definitely don't use it for short term. I use ICICI equity arbitrage. I also use a little bit of quantum liquid for my emergencies. The disclosure is available for every fund recommendation. So ICICI arbitrage 1 year and above, definitely not lower. It will be volatile. It may not give you high returns all the time. I expect about 6% should be all right. I think the arbitrage funds are slowly recovering from the difficulty in supply demand that was plaguing the market a few months earlier after the crash, around the crash time. And this is something that you can use. There are other funds as well. I will talk about that in future reviews and so on. But the ICICI is a fairly good fund. I use this fund for my son's education goal as part of debt asset allocation. So my wife has some money in there as part of our emergency fund. It's not our only emergency fund. It's emergency fund has got several buckets, and this is one bucket. Money market or ultra short term, Franklin India Savings Fund is still good. There's nothing wrong with this. The fund AUM has dropped by 71%. It was something like 5,000 crores in November 2019. It has gone down to 1,308 crores in August 2020. There's nothing wrong with it. If you're worried about Franklin, then you have ICICI money market fund or HDFC money market fund. That's fine. You can use it for 1 year and above. I'm going to write a detailed post on whether you should consider such money market funds or ultra short term funds. This is not an ultra short term funds, but for me, this is ultra short term enough. There's no need for a separate ultra short term other than money market, in my opinion. I'm going to write a separate post on whether you should consider these for long term and so on. 10-year gilt, SBI Magnum constant maturity, ICICI constant maturity. These are basically our index funds in gilts, but they have a higher expense. They have a fairly higher expense ratio for an index fund. They can be used for very long term goals, but you should be very careful about the volatility. If you know how to handle the volatility, and if you don't want credit risk but can handle wild fluctuations because of interest rate risk, demand supply pressures in the market, then you can consider the 10-year gilt funds. Many people have asked me why I have not considered the just the gilt funds, not the 10-year gilt, but just the gilt funds which can invest across maturity. Now I have to find a fund in this category that will kind of, which has a very proper mandate, which will say I will only invest in this kind of gilts and not that kind of gilts and so on. Otherwise the fund will be susceptible to fund manager risks. So what I'm trying to say is, the fund should either be a long-term gilt fund or a short-term gilt fund. If it tries to be both, then if it reads the interest rate cycles wrong, then it can get into trouble. So then it will be difficult. Then it will basically just a proxy for a dynamic bond fund. I don't like that. That's why I am not. But I will review these funds closely and consider that in future issues. ELSS funds. From my screener, Aditya Birla Tax Relief 96, DSP Tax Saver, they've been very good performers. Parak Parik Tax Saver can also be used because it's basically a clone of the Parak Parik long-term equity fund without the foreign investments. Then there is the aggressive hybrid or the so-called balanced fund or equity-oriented balanced funds. You can use HDFC hybrid, ICICI equity and debt fund, Mirae Asset. These are fairly good performers, and these are being screened from my mutual fund screener. Then we have the multi-asset category. This is a very weird category. I use this. By the way, I also use the HDFC hybrid fund. Multi-asset was ICICI multi-asset was previously called as ICICI balanced. Then it became a multi-asset, and then I just continued with it. But it won't be significantly less volatile. It will be just as volatile as equity, because it has got at least 10% of gold, and they do some dynamic balancing and so on. So some multi-asset funds will have more or less fixed asset allocation. Some funds will be a dynamic asset allocation. This is a dynamic asset allocation kind of fund. Multi-cap Parak Parik long-term equity is a very good fund. Of course, things can change because of the SEBI regulations. We'll have to find out. I am still invested in quantum long-term equity. Quantum long-term equity was part of this this category's my recommendation, but I've removed it for new investors. As mentioned in a previous video, I am still invested in quantum long-term equity. I expect it to recover once the market imbalance is more or less offset. Those are the videos which talk about what I just said now. Then the index funds, just the large cap, you have UTI, you have UTI Nifty, you have HDFC Sensex or HDFC Nifty. These are all fairly good funds with low expense ratios and so on. Then you can have a blend of large and mid cap, and by mid cap I mean Nifty Next 50. So you can have Nifty 50 from above, from these funds just mentioned above, and you can use just ICICI or UTI Nifty Next 50 in some blend, whatever you want, but you have to be careful. More of Nifty Next 50 will be volatile. If you are okay with just 10% of Nifty, 10 to 20% of Nifty Next 50, you might as well just use the Axis 100 fund, which is the lower risk category I'm talking about. It's up to you. You can either use it 50-50 up to anywhere between 50% Nifty Next 50 to 20% Nifty Next 50. That range, if you want, you have to separately use two funds. If you want below 20%, then you can just use Axis 100 index fund. That should be okay. Balanced Advantage, ICICI Balanced Advantage, in spite of its AUM, it's got a very good track record. There's no problem there. Mid and small cap, I had compared the mid and small cap funds with Nifty Next 50 and showed you that Nifty Next 50 is pretty good. You don't need to get a separate performer. But if you interested in names, these are not recommendations, but the names of performers in the mid cap category that have bet the Nifty mid cap 150 consistently are DSP mid cap, Invesco mid cap, L&T mid cap, and Kotak Emerging. They may or may not have outperformed Nifty Next 50. I have not checked recently. These data I just talked about are June 2020. So that's about it. That's Plumline for the last quarter of 2020. And as I mentioned, the Earn From Skills course, the early bird discount is closing on 5th October 9 a.m. That's 9 o'clock in the morning. Please buy it well in advance before that. And the group is quickly growing in membership, and I'll hope to see you inside. Bye-bye.